Hi there. Welcome to The Close. I'm Lindsay Biscaya in for Marella Fernandez. Today, markets will be closing in half an hour from now. So first, let's get to some of the stories we're following for you in the BNN Bloomberg newsroom. The price of oil is surging as tanker traffic came to a stop through the Strait of Hormuz following the U.S. and Israeli attack on Iran. The escalating conflict is threatening supplies in one of the world's key producing regions, with the strait handling as much as 20% of the world's oil shipments. U.S. President Donald Trump has said combat operations will continue until all U.S. objectives have been met. And Canada has secured financial backing for 30 new critical minerals projects. Energy and Natural Resources Minister Tim Hodgson says the project represents about $12.1 billion in new cash into the domestic mining sector. The new projects build upon deals that were revealed in October. Western allies have been seeking to find alternative supplies of rare earths to counter China's dominance in that field. And shares of Hudbay Minerals are seeing a drop today. The Toronto-based miner has signed a deal to acquire Arizona Sonoran Copper. The all-stock transaction is valued at just under $1.5 billion US and will see Hudbay pay around $9.35 Canadian per share. Hudbay already owns a nearly 10% stake in the copper mining company. We'll take a quick look at the markets here. The TSX is up at the moment by 0.3%, trading still above 34,000 after last week's new record high. And if we take a look at U.S. markets, it's been interesting to watch the kind of rebound today because of this conflict in Iran. Markets were down this morning. It seems as though the S&P 500 back down, Dow Jones still down. The Nasdaq trading up by 0.1 percentage points at the moment, though. Well, oil prices surge and stocks recover amid those continued tensions in the Gulf. And for more on that and his investment ideas, joining us now is Darren Dansereau, CEO of QV Investors. It's good to have you join us. Thanks so much for your time.
Thanks for having me, Lindsay.
What do you make of what we've been seeing in terms of market reaction to the conflict in the Middle East? And how should investors read what's going on? Should people just kind of wait in the sidelines to let the dust settle?
Well, I think there's a number of things that are going on. What typically happens, as was talked about earlier in Larry's show, just talking about how it was anticipated that this may happen with warships entering the region. And now we're actually seeing, unfortunately, an attack on the, when I say unfortunately, because of the lost lives. I think what we're seeing is impacts within the market, oil prices going up. Gold prices going up. So it really depends on, I think if somebody's looking longer term, there may be opportunities here in certain areas. I think the biggest thing, we have what's going on in the Middle East, but we still have what's been really happening within artificial intelligence and some of the negativity around some of the companies that have been anticipated to be impacted by what's happening, but maybe there's some opportunities.
Okay, so we'll talk about maybe some of those opportunities in a moment in your stock picks, but I want to move on to some of the volatility that we're seeing as we head further into 2026. Obviously, tariffs have already been a major cause of that volatility. Geopolitical tensions could be another one. What else are you kind of watching for this year that you feel could cause more waves?
Well, I think the one thing that, as we're seeing oil prices surge, there could be more inflation coming into the market. That may have an impact. It's been talked about the K economy. Those individuals that are at the lower end of the income spectrum may have more pressure put on them by oil prices moving up, which could impact some of the consumer discretionary companies. And if we do see higher inflation going up, we could see interest rates move positively, moving up in a positive direction, which may result in impacts on bonds, obviously, but also on mortgage rates, which could impact what we see in the housing sector.
What about the cost and returns from AI spending? That's another thing I know a lot of investors are watching for. We've been seeing a lot of tech stocks and software stocks going up and down since the beginning of this year. What do you make of what we've been seeing there?
Well, I think what everybody's trying to figure out is what sort of return on investment these companies are going to get from the spending that they've been doing. I think for us, what we see is that there may be opportunity longer term in some of these companies if they do see the return, but we see the bigger opportunity being in those companies that have been negatively impacted in terms of their share price, but maybe not necessarily negatively impacted in terms of what their business might look going forward. Examples being companies like Descartes, CGI Group, or Constellation Software.
Yeah, we've seen a lot of that lately, right? Like, for example, companies reporting pretty strong earnings and their stock price going down. So I want to get to your stock pick still, but just first, is that your strategy right now when it comes to investing, is kind of buying on the dip?
Well, for QV, we are long-term investors focused on those companies. The Q and V stands for quality and value. So what we're trying to do is look at what may be short-term blips or downdrafts in the stock prices, and then using that as an opportunity to look for long-term companies that we think we can invest in that will see a return. And I think for us, when you're seeing companies, oil prices moving up substantially, I think that maybe the opportunity looking at I think people are sitting on their hands wondering, is the oil price going to go up to $100? I think the biggest thing is going to be, is this going to be a short term, a few days, or is this going to be much longer? And I think when you ask that people should be sitting on the sidelines, I think it's really an investor needs to figure out, what they may anticipate is going to happen. That's not something that we try to do is say, well, the oil price is going to be this or that going forward. It's more what is being priced into the particular companies. And I think valuations on the energy side has been a bit pricey in terms of our mind. And so it's other sectors where we're seeing better opportunities.
Okay, your stock picks. The first is CGI Group. It's lost about 20% so far this year. What value do you see in this company moving forward?
Well, I think the biggest thing for us is this is a company we've owned for a long time. What we've seen as a management team that's very focused on providing excess cash flows and deploying that towards opportunities in terms of acquisitions. And so there is opportunity out there. Not only is CGI down, but many of the targets that they'd be looking at, whether it's public companies or even the private market, there could be opportunities for acquisition. We've seen the company take advantage of this low stock price and buying their own stock. They, in the most previous quarter, spent almost $600 million buying their stock. And when we take a look at the valuation, seeing it at 18 times forward PE, that's what their average is over the last 10 years, and they've actually been lower than that. So what we're seeing here is an opportunity to look at a high quality business, and there's been opportunities in the past with CGI seeing negativity around the stock price, allowing long-term investors like us to move in and take this short-term opportunity to buy a company that we think will be quite strong going forward. And as an example, if we look at their book to bill most recently for the last year, 110%. So they actually are increasing their bookings relative to what they have billed for the previous 12 months.
Okay, we'll have to be very quick with this last one. Just in the last 30 seconds, I apologize. Can you explain TFI International and why you like this company?
So for TFI, what we're seeing is we've seen a recession in transportation over the last number of years. This is a company that also has been acquisitive. They bought Daseke in the last few years. What we've seen in 2022 is the peak earnings was $8 in TFI. We think it could easily get back to $8 US and above that with this acquisition and a couple other smaller ones that they have made. P is about 15 times based on that $8, and we think that valuation is lower if you look at some of the opportunities they have in reducing their costs and adding on this additional revenue. So I think it's an attractive area that hasn't seen a lot of, it's moved up, but it's been under a lot of pressure.
Okay, we'll leave it there. Darren Dansereau is CEO of QV Investors. Appreciate your time. Thanks so much for joining us.
Thanks, Lindsay.
Up next, U.S. President Donald Trump stated on Monday that the United States and Israel will continue its attacks on Iran until it can no longer pose a threat, suggesting the conflict in the Middle East may last several weeks or longer. We've got more on that coming up in a moment. U.S. President Donald Trump says the U.S. and Israel will continue its attacks on Iran until it can no longer pose a threat, suggesting the conflict in the Middle East may last several weeks or longer. So let's get more now from Sina Azadi, Assistant Professor of Middle East Politics at the Elliott School of International Affairs. Professor, it's good to have you join us. Thanks so much.
Thank you for having me. Good to be with you.
Yeah, so Donald Trump saying that this could last weeks, but he also denied that this conflict would become prolonged. So what do you think is going to happen in terms of like a timeline here? I'm asking you to predict the future a little bit. I know that, but what do you think we could see?
I think that we should see an intensity of combat operations, both by Iranians and the Americans, to perhaps force the other side to back down. And seek a ceasefire. For Americans and the Israelis, it will be rather unfortunately an intensification of bombing campaign over Tehran. And for Iranians, as we've seen, they've been lashing out in the region, American bases, the GCC countries, the Arab countries of the Persian Gulf. They've become a target of Iranian retaliation strikes.
Do you think the U.S. anticipated those retaliatory strikes from Iran or the scale of them?
I don't think so. Because, first of all, President Trump, who said that he's the president of peace and started this war, he was sold a narrative that war with Iran will be easy because of the June 2025 conflict with Israel, because of the recent demonstrations in Tehran. And that's why I believe that he thought that he could get a quick victory. But we saw that unlike the 2025 conflict, Iranian response was rather quick. It means that Iranians were quite prepared for this. And we were seeing some escalation that I have not seen before in Iran's strikes. And that is to use Iranian Air Force, which has been mostly out of the fight. Qataris announced today that they shut down 2 Iranian Sukhoi 24 bombers, which means that the Iranians are escalating their operations too. I don't believe, again, I don't believe that the president or his advisors anticipated that the Iranians are willing to throw everything that they have at their disposal.
I know it's hard to tell because this is very much obviously a developing story, but so far, how are you evaluating the current damages caused by both sides? Which do you think maybe experienced the bigger impact?
Well, I think that we've passed the point of the so-called surgical strikes. Several Iranian hospitals have been hit. The Golestan Palace, which is a UN-designated heritage site, has been also hit. In response, and this is just aside the military targets. I'm also seeing that Iranians are targeting civilian infrastructure in Kuwait, in Qatar. And again, this is in addition to the military targets that the Iranians have struck so far. So I think, and some of the footages that I'm seeing from Tehran, I don't think it's really precision strikes anymore. There's a lot of smoke, there are a lot of explosions. Damages to homes. And in the first day of the war, we saw that some 110, maybe more, schoolgirls were killed in an apparent Israeli and American strike.
Mm-hmm. It seems as though at this point there's no clear succession plan if the U.S. succeeds in eliminating this regime that's been in power for quite some time. How challenging do you think it would be to eliminate remaining elements of this regime from power at this stage?
Well, based on what Secretary of War Pete Hegseth said this morning, Washington time, the objective of this operation is not a regime change or democracy in Iran. That's his exact words, and I'm quoting him. Rather, I believe that I think the Americans and the Israelis have decided to degrade Iran's industrial and defense capacity as much as they can, so they can, in a way, turn Iran into a vassal state as it is in Syria or southern Lebanon. Israelis also think that for them, a chaos in Iran, and this is based on a former Israeli negotiator's own comments, and I'm directly quoting him, chaos in Iran is better than a regime change. So I think that unfortunately we are headed into that direction of creating chaos in the country.
Not what the Iranian people want, I'm sure. Reports have indicated, though, that Iran and the U.S. could pursue a diplomatic solution still, even as these strikes are continuing. Do you think that's a likelihood?
I believe that if both sides can claim victory, they can sell a ceasefire politically. I don't think that either side has reached that point that can claim victory. And when I say victory for Iranians, this does not mean that Iran could militarily defeat the United States, and no one should be under that illusion. But I think that by imposing costs to the U.S., and not giving the Americans a definitive victory, Iranians can claim victory and then seek for ceasefire. For now, Iranians have said that we're not seeking a ceasefire. The U.S. president has suggested or implied that he would be open to talks. He said that the Iranians want to talk to me. I don't know how accurate that is, but I think this signals that he would be open to negotiations.
Okay, we'll have to leave it there. Sina Azada, Assistant Professor of Middle East Politics at the Elliott School of International Affairs. Really appreciate your time. Thanks so much for joining us.
Thank you for having me.
Up next, we are continuing to monitor oil prices amid escalating tensions in the Middle East. We've got more details on that coming up in a moment. Oil prices surged today before retreating slightly as markets evaluated disruptions to shipping in the Strait of Hormuz and damage to regional energy assets following exchanges of strikes between Iran, the U.S., and Israel. Let's bring in Rebecca Babin, Senior Energy Trader and Managing Director at CIBC Private Wealth for more insight. It's good to have you join us. Thanks so much.
Thank you for having me.
So Iran's Revolutionary Guard is now saying that the Strait of Hormuz is closed. I'm wondering what effect you're seeing in terms of the markets and oil prices now. They've, as we were saying, they surged earlier today, retreated slightly. What are you watching for?
So I think we're seeing two things in response to this. I think we're seeing a little bit of a rally off of the lows of the day, which was up around 6%. We're now up around 8%. So it's a 2% move on that headline. And the reason it's not more meaningful is because the Strait of Hormuz effectively was already kind of not seeing any traffic move through it based on the fact that many insurance companies were not willing to insure ships through the Strait of Hormuz. So traffic had already really been reduced to a very, very large extent. And so this headline does give us some escalation in terms of moving forward, that it will be targeted potentially by the IRGC, but the ships had already self-regulated. What we need to see now is some kind of game plan for how we do start to think about reopening the strait, whether that is something we've used in the past historically, whether it's a military escort, whether it's providing self-insurance for ships. So there needs to be some thoughts about how we can start to see ships traffic through the Strait of Hormuz, because really we don't have a lot of alternate routes. Unlike the Red Sea, where the Houthis were very active targeting vessels where you could reroute around the Cape of Good Hope, that doesn't exist for the Strait. We have some pipeline capacity that could be utilized from Saudi Arabia, which is around 3 million barrels of crude potentially. But again, that's not entirely safe either. That has been targeted by Iran in the past. So looking for solutions there will be critical. Another thing that happened when we saw this headline hit this afternoon is we saw option volatility spike up again. Option volatility had actually been decreasing throughout the day, and this headline did create a spike there. So having a reaction in the market, but not a significant one just yet.
You talk about, the solutions and how there needs to be, solutions looked at in terms of reopening the Strait of Hormuz. I wonder how long that could take, and also how long do you think global markets will kind of absorb this disruption?
So I think that is the most critical question in the market right now, is the duration of this potential disruption. And I think the way the market's looking at it right now is they're saying, okay, how much storage capacity do we have in the Middle East to absorb flows that are no longer able to travel through the Strait of Hormuz? In the UAE, Saudi Arabia, they think they have around 25 days of storage capacity that could be filled before you have to look at shutting in production, which would have a pronounced impact on crude oil prices. Iraq, which does ship through the Strait of Hormuz, around 3 million barrels, does not have the same amount of storage capacity. So those shut-ins could take place sooner. The other key buffer the market's looking at in terms of if those barrels aren't moving through the strait is the amount of strategic petroleum reserves that have been built up in China. China was very aggressive throughout all of 2025, stockpiling stockpiling crude, as well as in the beginning of 2026. They have a buffer there. They are the main buyer of most of the crude that travels through the Strait of Hormuz. So that buffer does have an impact on how the markets react. But if we start to look at a longer than a month, there will be a significant repricing of crude higher if there's not some flow through the straits.
Interesting. Okay, so I believe you said 25 days before some producers would need to start shutting down production. In the meantime, though, do Middle Eastern producers need to adjust their output and production in some way before that time period?
So in the meantime, I think there will be adjustments that are made that can be made. It's not something that you can adjust as a flip of a switch. So those things tend to take a little bit of time. But I'm sure there will be absolutely as many adjustments that can be made in the short term as can be. But I wouldn't expect that would be a valve that will alleviate the timeline of this. What's really going to change how this plays out is if we're able to start seeing traffic through the Strait of Hormuz, even on a limited basis, would be a significant, would extend that timeline significantly. So I don't think that the adjustments will move the needle as much as we would need them to.
You mentioned some of the countries that rely on the Strait of Hormuz already. I'm wondering, do any of those countries have like alternate routes to get their crude to export markets?
So broadly speaking, not really. Unlike the Red Sea, there isn't another route that can be used effectively to transport the crude, which is why this has always been the crown jewel of Iran's kind of strategy, is to threaten closure of the Strait of Hormuz just because of this exact fact. So that is the key element. That's the leverage point. It's about how we are going to be able to respond to this so that there could be traffic that can move through, and that's yet to be determined, which is why you're seeing the prices move as much as they have. You're also seeing this impact in LNG markets. LNG travels through the Strait of Hormuz, and that has even less spare capacity than crude oil does, which is why you're seeing somewhat more of a move in LNG markets today than you are in crude.
Okay, we will leave it there. I believe we're out of time. That was Rebecca Babin, Senior Energy Trader and Managing Director at CIBC Private Wealth. Really appreciate you joining us and giving us that insight. Thanks so much.
Thank you.
Coming up, we will speak to the Minister of Energy and Natural Resources about progress on Canada's major projects and strategy moving forward. Stay with us. That conversation is next. Here are the closing bells at the NASDAQ. The SPS Commerce is ringing the closing bell tonight. At the New York Stock Exchange, Donaldson Company rings the closing bell. And on the TSX, International Ministers of Mines Summit to celebrate the 11th International Mines Ministers Summit. You're watching The Close on BNN Bloomberg. I'm Lindsay Biscaya in for Morella Fernandez. Here's how we close the day on Bay and Wall Streets today. Interesting day on the markets as many eyes of investors were on that conflict in the Middle East, which we are, of course, continuing to follow closely. The TSX, S&P 500 and NASDAQ all finishing the day trading up, though, ever so slightly. The TSX up by 0.5%. If we look at some of the big moves of the day, Energy Fuels was one of the top performers on the TSX today after the company outlines its uranium production guidance for 2026, estimating 2.5 million pounds while expanding rare earth capabilities. Energy Fuels finishing the day up 9.6%. On the flip side, Endeavour Silver, one of the biggest laggers on the TSX after the company announced board and management updates and tries to advance and become a senior silver producer, finishing the day down by 5.2%. And we're also watching shares of Hudbay Minerals, another poor performer today on the TSX, despite announcing it will buy Arizona Sonoran Copper in a $1.4 billion all-stock deal. You can see investors wary about that. Hudbay Minerals finishing the day down by almost 6%. Okay, let's go back to Andrew Bell at PDAC, because as trade tensions with the U.S. rise, there is fresh pressure on Canada to speed up major energy and resource projects. Andrew is standing by now with Tim Hodgson, Minister of Energy and Natural Resources, for more on this. Andy?
Thanks very much, Lindsay. Yep, back at PDAC, the world's #1 mining show. And yep, I'm with Tim Hodgson. He's the Minister for Energy and Natural Resources. Thanks for giving us the time, Minister.
Happy to do so.
So you've been almost a year in the job. I bet you didn't think we'd see this kind of life during wartime scenario, by which I mean nations anxious to secure supplies of these vital resources.
Well, look, it's we are in a new world order. The Prime Minister has been thinking about this for quite some time. His speech at Davos was really an articulation of what he has been seeing for the last year, and how he thinks we can tackle that. And I think the thing that made that speech so special to so many people was not just that he laid out in a way that people could understand what was happening and why people were feeling the angst they were feeling, but he also laid out a solution which was middle powers like Canada need to retool their economies, need to become less reliant on the hegemons, need to stop the scenario where hegemons use our integration with them for economic coercion, by building new partnerships, by building new trading relationships, by building new infrastructure that puts cards in our hands in this geopolitical world. And that is resonating with our allies around the world. And that's what makes this such a special moment, because critical minerals are the cards that we have that differentiate us in the world.
Although, in a way, it's more about the processing, isn't it? That's when the real value is added. Now, I know you're backing processing in this country, but it's going to take an awful long time to catch up with the Chinese. I mean, all the metal smelters are in Korea, Japan, China, and we're not building smelters yet in this country.
So what's happened is in other countries, their smelters have closed. We've kept ours open.
Some smelters, yes.
We have kept some of them open, and we're now reinvesting in those smelters, and we're taking advantage of core Canadian technologies around how to extract some of the critical minerals the world so desperately needs from our copper smelters, from our zinc smelters, from our nickel smelters, and that is differentiating us in the world.
You announced today a bunch of projects you're backing. Some are interesting. It's extracting minerals from old mining sites, at least one of them is. You said this will unlock, your government said it will unlock about $12 billion in private sector investment. One thing I'm always curious about, though, say you give 10, 20 million in support to a project. I don't recall seeing press releases, oh, well, this one failed, and we had to write off the investment.
Look, part of the role that the government plays is we want to provide capital where there are market failures. So we do things like our Canada Growth Fund provides first-of-a-kind risk. We finance that. That's hard to finance in the private sector. Taking that first-of-a-kind risk means that Canadian technology gets developed, gets proved out, and then we get to sell it to the rest of the world. We're doing that with some of the new smelting technologies that Crawford Nickel is talking about. We're looking at some new technology that Foran Copper is going to use. Those types of investments, they don't always pan out. We're doing work with Saskatchewan Research Council, which is, we're doing work with UCOR. We're doing work with some of the other refiners of heavy rare earth metals that is going to differentiate Canada and put cards in our hand.
Yeah, and obviously some of the stuff is going to fail. Mining is notoriously difficult. This is another discussion, but I sometimes wonder if the government should do a better job of admitting when things have failed. But you Yeah, sometimes it's, we can't talk about that. It's commercial confidentiality.
So I'm not sure which particular one you're talking about, but
Bombardier. A lot of money was lost in that fraud in South Africa involving Bombardier and the Gupta brothers.
Yeah, but that's not a metals and mining.
No, okay. So yeah,
I'm focused on metals and mining here.
For sure you are. And as former head of Goldman Sachs, you know about raising money, and this kind of metal processing, it can be tough to actually attract capital. The early stages, anyway.
Absolutely, it can be, and that's why we have things like our first and last mile fund to create the infrastructure that would allow that processing to happen. That's why we've got our Critical Minerals Sovereign Fund, which is designed to do offtake agreements, provide potentially stockpiling under our Defense Security Act. Those types of things give market certainty to attract that capital. These are all tools that we're going to deploy to make sure that Canada not only leads in the production of critical minerals, but leads in the processing of those critical minerals as well.
What would you say? I know it's hard to, your job, you've got so much to do. It's not an easy job. But do you spend most of your time on energy or other natural resources, would you say?
I am the Minister of Energy and Natural Resources,
right.
So I do both.
Yes.
Look, I am incredibly fortunate that Canada is endowed with incredible conventional and clean energy and critical minerals and forestry that differentiates us with almost any other country in the world.
Certainly G7 countries, yeah.
What I find as I go around the world is they all want what we have. Today, energy security is national security. Secure critical mineral supply chains is national security, is sovereignty, and we have that. This is our moment. This is our moment to shine. The world wants what we need. We need to develop that. So we thrive in this world where hegemons want to behave in a way where they want to do as they may and have the weak do as they must. We can never be in that situation.
Now, I know you'll be tempted to give a non-answer to this one, but when you work for Goldman, and things can move at lightning pace in investment banking, highly competitive. You put deals together, incredible deals, very quickly sometimes. When you move to oversee the public service, now you're not allowed to say the dedication of public servants impressed me, but what was the number one thing that struck you? I mean, it's a slower pace of life.
I think you'll find under this Prime Minister, the pace of life is pretty intense. And what I would say is certainly in my department, we see the civil service rising to the occasion. You see things like the core sample. I was talking with our 6 private sector partners around the Canadian core library that we
involving AI, I think.
Yes, and we have 6 private sector. What I heard from every one of those CEOs was, "Wow, you guys turned this around from talking about it to investing in it in 6 months." I mean, we are moving at speeds not seen since World War II. That's the directive from our Prime Minister.
It's interesting you mentioned, and of course, in the government in World War II brought in the $1 a day men but cutting through bureaucracy was a problem even back then. Yeah, I mean, you can't blame the public servants. I mean, that's the culture and they're very risk averse.
Look, what I'm finding is that the folks in Natural Resources Canada are rising to the challenge. Let me just look. Our department brokered the first 26 deals we announced back in October at the G7 Energy and Natural Resources Ministerial. We announced 30 deals today. I would put our department people up who have done 56 deals in 6 months and say they've been working hard.
There's a lot because they have to do due diligence and it's not an easy thing. Minister, thank you very much indeed.
Thank you.
Tim Hodgson is the Minister for Energy and Natural Resources. It's BNN Bloomberg live at PDAC, the world's #1 mining gathering. Back to you, Lindsay.
Okay, Andy, thanks so much for that. That's BNN Bloomberg's Andy Bell. Up next, we will take an in-depth look at some of the stock movers of the day. Stay with us. That's next. Welcome back. For more on some of the stocks that we're moving today, we're joined now by Bloomberg's equities reporter, Stephanie Hughes. Stephanie, it's good to see you. Let's start with Air Canada. This is the biggest lagger on the TSX today, but it seems as though that conflict in the Middle East really hit the entire airline sector pretty hard.
Yeah, that's right, Lindsay. Happy Monday. So it hit the entire sector, as you mentioned, but Air Canada really got smacked on the TSX today. Those shares dropped by as much, or by over 6% at its lowest point, which was its biggest intraday decline since last summer. And it's unsurprising. It's also one of the worst performers on the TSX for pretty much the entire trading day today. And unsurprisingly, like you mentioned, this is tied to a broader sector sell-off tied to that conflict in Iran that really escalated over the weekend, just based on U.S. and Israel launching their own separate attacks over the weekend and really casting doubt over the sector. So the airline operator canceled flights after there were some travel advisories issued, and that expanding conflict over the weekend led to airline closures, disruptions, just a big mess there. And it's not just Air Canada that's being hit here. We also saw American Airlines in the U.S. Falling by double digits, and other tourism operators or any kind of travel-adjacent companies like Carnival Cruises. So it's been a wide, uncertain kind of sell-off in any name that really deals with travel or with tourism, Lindsay.
Absolutely. Okay, on the flip side, though, you're watching MDA Space gaining today, finished the day up more than 5%. What's happening there?
Yeah, it's a better day for defense segment. So MDA Space, a satellite developer, those shares gained by over 5%, as you mentioned, biggest intraday gain in just over a month. And that's because it's among the top top performers on the TSX today, as a lot of its business is related to defense. It creates these satellite constellations, as it's called, to just kind of do some imaging for across countries and all that. And it's actually playing a very active role in the Canadian government's push for Arctic sovereignty. So the stock is recouping a lot of the losses that it sustained in the back half of last year. It did fall from an all-time high back in 2025, but it does have a pretty strong start to the year, and days like this are adding on to those gains, Lindsay.
Okay, very interesting stuff. That's Bloomberg's Stephanie Hughes. Stephanie, thanks as always for that. Appreciate it.
Thank you.
And of course, joining us now for some movers south of the border is Bloomberg senior equities reporter Bailey Lipschutz. Bailey, good to see you as well. So as I'm sure you heard, we were just talking about Air Canada, but you're watching other airlines and cruise lines that are affected by what's happening in the Middle East.
Yeah, I was going to say Stephanie and I guess, are sharing notes because we're on the same team, which makes sense because we're all at one Bloomberg. But keeping an eye on airlines here in the U.S., airlines and cruise lines, similar to what Stephanie mentioned, we saw a sell-off in United Airlines as well as American, Alaska, United, pretty much the entire basket under pressure. As you can see, American Airlines closing at the lowest level in a few months, really. Not too bad of a move, though, when you look at it on an intraday basis. We also saw some selling pressure across the cruise line stocks, mainly looking at Norwegian as well as Royal Caribbean and Carnival. The big thesis, pointing back to what Stephanie mentioned, not only do you have higher energy prices, you also do have some uncertainty around people's ability to spend and also willingness to potentially travel to the Middle East. One thing to keep in mind, these cruise lines as well as these airlines don't really have a lot of exposure strictly to the Middle East, to Israel, as well as some of the other countries in the region, but certainly could impact the ability to execute on flights and obviously doesn't help sentiment broadly speaking. So that's why we saw the group under pressure, but again, not really the closing at the levels that we saw them open at.
No. Okay. And you're also watching energy stocks. It's been an interesting day for energy stocks. Which stocks in particular are you watching?
Yeah, I want to call out some of the big oil companies, talking about Exxon, Chevron, some of the other bigger names outperforming on the day. Again, same story as we saw this concern and uncertainty around the Strait of Hormuz and the ability for oil to come out of the region. We obviously saw U.S. E&P companies and kind of midstream operators as well outperforming on the day. As you can see, Exxon back to where it was just a few weeks ago because of the fact that crude was back well north of $72 a barrel today, trading at the highest level since last June. So as oil goes, so do these companies, and obviously that's something we'll be keeping a close eye on over the coming days and weeks, just trying to get a better grasp on what is next for the U.S.'s strategy in Iran and what that ultimately can mean for oil as well as some of these energy names.
And lastly, a very different story. NVIDIA has announced it's investing $4 billion in two companies that develop data center optics. Investors seem to like this. NVIDIA up once again by almost 3% to end the day. Tell us more about this investment.
Yeah, Coherent and Lumentum rallying even sharper. So as you mentioned, NVIDIA up, maybe on investors rotating back to some of those Mag 7 names, but also we are seeing double-digit rallies for Coherent and Lumentum. The big things to take away is these are two companies that one makes lasers, one makes optical components, and they both are kind of put into some of those data centers. So not only are these big contracts in terms of money being spent by NVIDIA, but also strategic investment. As you can see, it's a pretty breathtaking chart on Coherent. Nothing but up and to the right. Investors love to see that. Again, closing at pretty lofty valuations, as well as Lumentum, as you can see, rallying on the day, double digits. So investors really betting on NVIDIA and the need to continue to spend money, and also betting that their dollars allocated will pay off on both the front and back end. So those are areas that we saw really standing out in what was a choppy day, albeit with most major U.S. indices closing higher and well below where they opened and where we thought they were going to be, just about 6 or 7 hours ago.
No kidding. A choppy day is a good way to explain that one. Okay, Bloomberg's Bailey Lipschitz is joining us. Bailey, thanks as always. Up next, oil prices surge and U.S. markets rally after choppy trading amidst military tensions in the Gulf. We've got more on that after the break. Oil prices jumped and stocks recovered after a shaky start, even as the markets eye the ongoing U.S. military action against Iran and Iran's retaliation. So for more on investing in this volatile environment, joining us now is Rucha Sharma, chair of Rockefeller International and founder and chief investment officer at Breakout Capital. It's good to have you join us, sir. Thanks so much.
Thanks, Lindsay, for having me back.
So it's interesting to see the markets, turn positive after a bit of a nervous start today. Do you think investors are already kind of taking this military action in stride?
Well, I think the long history of geopolitical conflicts is that markets tend to recover after like an initial shock. Now, what's happening is that time horizon is getting more and more compressed, because historically the work that I've done on this is that if you look at all the major geopolitical conflicts in the post-World War II era, the average decline of the S&P 500 or the US market has been about 4% or so, and it tends to recover that within a month. But I think that research seems to be now well known, and so markets are getting even quicker in terms of shrugging this off. I think the basic calculation is that these are temporary blips and they don't do much to interrupt the economic cycle. And overall, the economic cycle looks pretty okay, which is that the global economic recovery is still on. And yeah, oil prices went up 5-6% today, but from a relatively low base. And so I think that the overall calculation is that this is not going to be a very drawn out conflict. And also the fact that the initial success that Israel and US have had is also being reflected particularly in those two markets, which is that the best performing market in the world, ironically, this year, or at least today, and even since the conflicts began in the region back in October 2023, has been Israel. So I think that that's what's telling you about how power is shifting in the region and who's prevailing.
So I take your point that you mentioned off the top, that it really is like that initial shock and then the markets kind of absorb it. But you did mention, the timeline of this, because President Donald Trump has said that the military action could last a few weeks. So could we see more of an impact, particularly on energy prices, if this were to go on longer?
Yeah, there are all sorts of scenarios in play, but I think that the market is taking the basic bet that this is not going to last too long, and that the success, or the apparent success at least, that Israel and US have had initially is encouraging from their standpoint. So therefore, even some of the local markets in the region, if you looked at what's happened in the Saudi market or the Egyptian market, they all fell about a couple of percent, but nothing major. So I think that that's the basic bet the market's taking. Now, you can say that's a wrong bet, but I think that the basic bet the market's taking is that one way or the other, this conflict doesn't last too long.
Okay, in terms of whether this could impact, potential inflation, raise inflation, do you think it could? And how do you think the central banks might react to that? Could they become more hawkish on rates as a result?
Yeah, I think that there is no real meaningful impact because, as I mentioned to you, that the rise in the price of oil so far doesn't really do much to move overall inflation. I think someone did a study in this that this isn't even amongst the 35 greatest one-day oil price rises that we have seen. So in that way, this is really nothing off the radar. This is pretty much par for the course as far as market moves are concerned. So I think that I know that this is the really big news event of the day, the week, and may last for a while. But at least from a market standpoint, if you look at the market moves, including the price of oil or other financial assets, it's pretty mild compared to anything that we have seen in the past.
Right. In terms of the volatility, though, right, like just coming at us from many different directions, there seems to be a lot of different factors that are causing volatility in the markets, the military conflict, U.S. tariff uncertainty, to name a few. How do you think investors should be navigating all of this?
Yeah, I think that what they need to keep an eye out in, obviously, are some of the more economic factors, because predicting geopolitical events has never been the strength of investors. And as I said, that more than 90% of the time, these geopolitical conflicts blow over. There's always a small probability that this is something far more sinister that we saw like 100 years ago or something. But I'd say that those probabilities are very hard to discount. So I'd say keep the focus very much on the economic cycle. And here, I think that the bigger concern for me is what's happening in the credit markets, which is that we saw that in the private credit markets, there are some problems which are emerging. And then also, obviously, the whole AI trade, which is that, is this now reaching a level where it's becoming far too optimistic in terms of what AI can do? Are we seeing the classic overinvestment that we see after big technological breakthroughs and all the excitement that leads to? I think that those are the fundamental factors that I'd keep an eye on. And as far as the geopolitics is concerned, yeah, it's obviously a harrowing time when you see these kind of news headlines. But this is not what really drives economic cycles more than 90% of the time.
Okay, we'll have to leave it there. Ruchi Sharma, Chair of Rockefeller International and Founder and Chief Investment Officer at Breakout Capital. I appreciate your time. Thanks so much for joining us.
Thanks, Vincent.
Coming up, we will have more on how the attack on Iran is stoking geopolitical tensions in the region. That's happening right after the break. Stay with us. U.S. President Donald Trump announced an attack on Iran over the weekend, of course, moving oil prices. And for more, we sat down with John Allen, former ambassador of Canada to Israel and senior fellow of the Bill Graham Center for Contemporary International History at the University of Toronto.
I think a combination of factors. One was the weakness of Iran and the weakness of its proxies in the region. Obviously, Hamas had been weakened. Hezbollah had been seriously weakened. The Houthis had backed off once the ceasefire in Gaza took place. And Iran's ballistic missile defenses had been seriously harmed. And I guess the other thing is that I think Bibi Netanyahu was able to convince Donald Trump that this might be an opportune time either to negotiate the end of Iran's nuclear capabilities, or if that doesn't work, to try and force a regime change or a change in policy regarding nuclear ballistic missile technology and support for proxies.
Now, we saw the leader taken out and several key figures in the government. What does the new Iran look like right now? That new the government that is on the ground there, is it one that would be open to some kind of a deal, a peace deal? The new looks very much like the old. They have the same president who is reported to be more a liberal. They have now former Supreme Court justice who is considered to be very hard line. And they have another cleric taking the place of Khomeini. So far, Iran has said they're not interested in opening up negotiations again. They were in the middle of talks when Israel and the U.S. began the bombings. President Trump has indicated that he would be open to having renewed discussions. But I think at this point, Iran is a bit wary of trusting either Trump or Netanyahu.
And now Trump called for the people of Iran to rise up. Is that realistic? And what might happen if that actually did happen?
I don't think it's realistic. He suggested that the Iranian Revolutionary Guard lay down their arms, they would be given immunity, and they should hand over their weapons. Now, who should they hand over their weapons to? Very recently, in January, approximately 30,000, according to some reports, of Iranian citizens who were protesting were brutally massacred by this same Iranian Revolutionary Guard that Trump is suggesting should lay down their arms. And I don't think they're ready to do that right now. And it's not at all clear, unless there are boots on the ground, who they're going to hand their weapons over to. I think while the Iranian people in Iran and in the diaspora are welcoming the attacks, at the same time they're very worried about where this could go. As we know, Roger, regime change in the region, in Afghanistan, in Iraq, in Yemen, and Libya has not gone particularly well before.
And I just want to get your thoughts on, we're almost out of time, but Mark Carney's release on this, his statement. Thoughts on that, and where does Canada fit in with all this?
Well, I must say I was a little surprised with how full-throated the Prime Minister's support for these attacks were. In my opinion, and I think in the opinion of some others, this was not a case in which there was either the right of self-defense. There did not seem to be an imminent threat against either the U.S. or against Israel, and there was no UN Security Council authorization. So it's certainly arguable that these attacks were contrary to the UN Charter and customary law, which talks about the non-viability of states, and there are very limited reasons for conducting these attacks. So Carney, nonetheless, and despite what he had to say in Davos about opposing might is right, came out very clearly, much less nuanced than his European partners, and said that he supported this fully. Obviously, he supports the security of Israel and its right to exist, and he talked about obviously the various horrible things that this regime has done and has threatened in the past. There's no question about that. But whether or not you want to give Donald Trump and Prime Minister Netanyahu the right to decide who to attack when, I think is another issue.
That was John Allen, Senior Fellow of the Bill Graham Center for Contemporary International History at the University of Toronto. Coming up, we will provide more coverage from PDAC, where we'll find out about the world's largest undeveloped gold project. Stay tuned. Let's head back to the conference floor at the PDAC Mineral Exploration and Mining Convention, where Andy Bell spoke with the CEO of Seabridge Gold about the company's KSM project in British Columbia.
We're back at the PDAC, the world's favorite mining show, and with gold near record highs above $5,000 US an ounce, some people in the industry are thinking big. Our guest has been doing that for a long time. We're joined now by Rudy Frank, CEO of Seabridge Gold. Thanks very much for joining us.
Andrew, great to be here. Thank you.
I'm looking at a map here of British Columbia. You've been working on this KSM project for quite a few years. It's not actually that remote. It's near the Bruce Jack mine, etc. But it's the scale of the project that's one roadblock.
Correct. It's the largest undeveloped gold project in the world. And if you ignore the gold and look at the copper, it's the third largest undeveloped copper project in the world.
Wow.
It's a project with existing resources that we know that have been drilled that can have a mine life in excess of 100 years.
Would be your outline plan is 1 million ounces of gold a year.
The first 33 years of mine life is scheduled to produce 1 million ounces per year on average and 178 million pounds of copper a year.
That would be one of the biggest gold mines in the world.
It will be. I think there's only 4 mines in the world that produce 1 million ounces a year, and this could be number 5.
What is the capital cost, though, roughly?
So we did a pre-feasibility study in 2022 that estimated upfront capital of $6.4 billion US. So it's a big upfront capital. But at today's metal prices, the payback on that capital is less than 2 years.
Whoa. You can't go in small, though, start building it on a small basis and reap cash flow, or?
If we could, we would have done that.
Yes.
It's the scale that makes this project work, the infrastructure that has to go in on the front end. Without that, you just can't have a small project.
And you're looking at digging a gigantic open pit, I imagine?
We have 5 deposits. All 5 of them can be mined as open pits.
Yeah.
The first 33 years of mine plan, though, are open pits.
Right. And would you be using the gigantic trucks, the 300-ton trucks?
That's what works.
Yeah. Yes. But you have roads and power not too far away from you?
Yeah, so when we bought this project in the year 2000 from Placer Dome, there was no infrastructure there. We now have a major highway, Highway 37, that goes right by our project.
Yeah.
Along that highway, the government built the Northwest Transmission Line, bringing green hydropower to the district. We've now secured with BC Hydro 245 megawatts of power from that line, which we're now tying into. We've now contracted with BC Hydro and spent over $160 million with them, and they're building our switching station. And then last but not least, a short drive from the project, right from the front door, is the town of Stewart that gives us 2 port facilities.
Gives you 2 what?
Port facilities.
Oh, yeah, okay. Yeah, because you'd be bringing in some heavy equipment, I imagine, by sea.
And shipping out your concentrate.
Right. You wouldn't process it on site?
No.
Or why is that, just on the scale?
It's basically you make a copper gold concentrate, and that's got to go to a smelter. And most of those smelters exist on the Pacific Rim, in Asia, Japan, China, Korea, and elsewhere.
Right. How many tons of copper? Do you have a rough number for us? Would you produce each year?
Yeah, so 178 million pounds, which is about 100,000 tons of copper.
That's gigantic. Yeah.
And the amazing thing, Andrew, is this mine plan of 33 years doesn't even touch the 2 higher grade copper deposits we have. It's focused on quickest payback of capital, focused on gold. But if you want to produce more copper, you go after 2 of the deposits that are not even included in our permitted mine plan.
But as you say, there's only a certain number of miners who could take this on. The BHPs, presumably, of the world. BHP, now the world's biggest copper producer.
Yep. And that's been a challenge. We've made it very clear from the beginning. I remember one of my first interviews with you, I talked about we can't build this ourselves, we need a partner. Yeah. And here we sit almost 20 years later, still not having that partner. And you look at the universe of big companies, I'd say there's probably 7 companies in the world that check the boxes. Size-wise, technical capabilities, and social license. We dealt with all those 7 companies in a joint venture process. We filtered it down to 3 finalists, and now we're engaged with our preferred partner.
Can you give us any names?
No.
Okay. So $6 billion. Typically, how much of that would be $6 billion US or a bit more? How much of that would you think would be equity?
Well, we think that the partner, obviously our goal in a joint venture is to hang on to a meaningful interest in the project while minimizing our capital contribution and pushing it as far into the future. The nice thing about a project like KSM, because of the copper concentrate, you can attract large smelting companies that are willing to provide construction capital in exchange for the offtake rights.
Right, yeah. And there's these smelters, they don't really exist on the North American Pacific coast?
No.
Why is that? They just
try to get one permitted.
Yeah, I mean, quite a bit of pollution from one of those things. Yeah, very difficult. Nobody wants them near them. Yeah, I mean, that's going to be a challenge, isn't it? Wresting control of minerals from China.
Yeah.
Building these things.
Yeah, for sure. I mean, we are fortunate. There's a lot of good smelting companies in Asia, in Japan.
Yeah.
You have Sumitomo, you have Mitsubishi, and companies like that do smelter offtake agreements with projects like this. Most of the big copper projects like KSM are situated down in Chile and Peru and elsewhere. Very few in North America.
And what about BC? Have you got your permits, or what stage are you at with that?
Yeah, so we've now put, I can't imagine I'm saying this, we put about $1.4 billion into this project already. We received our environmental certificates provincially and federally in 2014. We continued work on the project, and in 2024 we received what's known as substantially started, which means that our environmental approval is now good for the life of the project.
Any kind of a timeline on when you can make an announcement on the joint venture or the big partner?
Stay tuned.
Okay, but it's changed the tenor. I guess gold well above $5,000 has changed the atmosphere.
Yeah, you look 2011 when we had a nice top in the gold equity market.
Yeah.
Big companies were doing, quite honestly, stupid deals, overpaying for assets, and then as the gold market went against them, they shut things down.
Yeah.
They sold non-core assets, and they were not looking for new opportunities.
No.
Fast forward to today, the amount of cash flow these big gold companies and copper companies are generating versus 5 or 6 years ago, they now have the financial flexibility to do projects like KSM. And the elephant in the room is that they need new projects. Their pipelines are fairly empty. They don't have a lot of projects in safe jurisdictions that can get built. And for their future, they need projects like KSM.
Thanks very much, Rudy.
My pleasure.
Rudy Frank, the CEO of Seabridge Gold. You're watching BNN Bloomberg, and we're down at PDAC, the world's #1 mining show.
Okay, thanks for that. That was BNN Bloomberg's Andy Bell. Coming up, hot picks. We will zero in on 3 plays in the industrial sector right after this. Welcome back. On Hot Picks today, we zeroed in on 3 plays in the industrial sector, and our guest had Secure Waste Management as his top pick. So for more, we sat down with Ian Gillies, Managing Director at Stifel.
When you think about where we are in the stock market today, there's an elevated risk of concern in and around AI, disintermediation, how it's going to impact people-centric businesses and blue-collar or white-collar businesses, excuse me. And we think Secure stands out from this pack because it has what is largely an irreplaceable network of assets in Western Canada that removes and helps clean up oil field waste. We think one of the interesting things about this stock in particular is that there's really only 2 players that do this in Western Canada. That creates a very strong operating environment for the company. And because of this, what you have is the ability to move prices up 3 to 5% every year, alongside the ability to benefit from higher waste volumes. Western Canada production grows at roughly 2 to 3% every year. And then the other important aspect for this business is that it's an integral player in water disposal and dealing with some of the ongoing water production in Western Canada. And so because of all of this, the company is growing its EBITDA roughly 7% a year. But the more interesting thing for us is that the company converts roughly 50% of this EBITDA into free cash flow, and it doesn't need to invest a whole lot of capital back into the business. And so as a result, it's growing its dividend. It recently just started doing that again. It is able to buy back quite a bit of stock. We think they could buy back anywhere from 3 to 5% of their shares this year. And then it's also moving well through a consolidation strategy of rolling up metals or scrap steel businesses throughout Western Canada. And that's an important business because you're seeing a proliferation of electric arc furnaces being built in North America. And so the combination of these items lead us to believe we think investors are going to start moving back to old world businesses. And this is the one with all the financial characteristics you'd like to see.
And does it have any expansion plans right now? I mean, you say we just meant Western Canada, but is it looking beyond that outside of North America?
It's primarily a Western Canadian business. They're adding to their asset base in and throughout Western Canada. There's always small bolt-on projects. I believe there's been some looks at U.S. assets in the past, but it's a very different operating environment, and there's more than enough growth to be had in Canada at this time.
There is. So you do think there's room for it. Any challengers, or does this have a moat?
There's a very real moat. When you think about the facilities this company's built in Western Canada, the last one was built in 2014. They were costing, call it anywhere between around $35 million then. We think these facilities could cost anywhere from $50 to $75 million now. And we don't believe there's access to capital to build these, nor demand. So we don't believe that they can be replaced in any way, shape, or form.
Okay, let's get a couple more in here. Badger Infrastructure Solutions. They do the shovel-less digging, right?
Yeah, Badger's once again a pretty interesting business right now. They do non-destructive excavation. So if you were digging a hole in your backyard and you didn't want a line strike, these guys, their trucks would make sure that doesn't happen. Now, that's not what they do. The focus for Badger is largely on large industrial and commercial projects, and they're about 90% U.S. focused, and they're benefiting from a number of tailwinds in the U.S. Number one being an increase in infrastructure-related spending through the IIJA and the like, but there's also a very, very strong benefit coming from AI and data center development. This is about 8% of their business now. And when you think about the power and utility needs, with Badger being the largest hydrovac company in the US with a coast-to-coast network, they should very clearly be a winner. One of the interesting things for me about this stock over the last month or so is that it has traded off around concerns in the first half of the year that margins won't be going quite as fast. But we think people are looking at this the wrong way. They're investing in their business through the next few quarters because they see a rapid growth wedge coming in the back half of next year and into 2027. We think we're going to get verification of this later this week through a higher truck build program than the market's expecting. And so we think this one's going to be a real winner when we look out 12 months from now.
Okay, and last but not least, WSP.
Yeah, WSP has been a very interesting stock this year. It has suffered at the hands of this AI disintermediation trade. We believe the baby's been thrown out with the bathwater on this stock in particular. When you think about engineering, it is drastically different than something like software. And because engineers tend to operate in the real world, we actually thought the CEO of WSP made a very interesting point last week on their conference call, and that engineers are deterministic rather than probabilistic like AI. And when you think about that, as you're building bridges, looking at soil, doing the things we use every day, you need a determinate answer and not the best probability, because we can't have these assets fail. It's going to take some time for the market to sort out the wheat from the chaff related to these businesses, but we do believe that the company's long-term consolidation story, the spending trends we're seeing out of governments globally, are going to continue to drive solid fundamentals. And so with the stock trading at, call it roughly 18 times earnings right now, we don't think you get very many chances to buy businesses of this quality at this sort of multiple.
That was Ian Gillies, Managing Director at Stifel. Okay, we're going to take a look at what's happening on Bay and Wall Street before we wrap up here for the end of the day. The TSX finishing the day up by more than 200 points, up by 0.5% to finish the day. It's been an interesting day on the markets because of what we're watching for between the U.S., Iran, and Israel today. Initially, markets trading down, but it seems as though ending the day, the S&P 500 and the NASDAQ at least in positive territory. The S&P 500 up ever so slightly, and the NASDAQ also up by 0.3%. And that does it for today's program. Thanks so much for joining us. We'll see you tomorrow.